stop. If you are over 60 years old and you are still paying all of your taxes like everyone else, this video could save you thousands of dollars every single year. Most seniors in America are overpaying taxes right now. Not because they have to, but because nobody told them they don't have to. The IRS, the banks, even your own accountant, they are not going to call you and say, hey, you qualify for this exemption. That's not how the system works. But today, I'm going to show you exactly 5 taxes that millions of American seniors are legally exempt from, and most of them have no idea. Stay until the end, because number 3 is the one that shocks people the most. Let's get into it. Now, before we dive in, let me be clear about something. This is not a loophole. This is not a trick. Everything I'm going to share with you today is completely legal, written directly into United States tax law. These are benefits that exist specifically for seniors, for people who have worked their entire lives, paid into the system, and now, finally, the system is supposed to work for them. The problem is that most people don't know these benefits exist, and the ones who do know, they're saving thousands every single year. I've broken this down into 5 specific taxes. We're going to go through each one, explain exactly what it is, who qualifies, and what you need to do to stop paying it. If you're new here, welcome. This channel exists for one reason only, to make sure American seniors know exactly what they're entitled to. Hit that subscribe button and the notification bell so you never miss another video. All right, let's start with number 1. Tax 1, Social Security tax. Tax number 1, Social Security benefits tax. Here's something that makes a lot of seniors angry when they find out, and rightfully so. You worked for 30, 40, sometimes 50 years. You paid into Social Security your entire career. And now that you're finally receiving those benefits, the government wants to tax them again. But here's what most people don't know. If Social Security is your only source of income, or your primary source of income, you may owe 0 federal tax on those benefits. 0. Here's how it works. The IRS uses something called combined income to determine how much of your Social Security is taxable. Combined income equals your adjusted gross income, plus any non-taxable interest, plus half of your Social Security benefits. Now, here are the numbers that matter. If your combined income is below $25,000 as a single filer, none of your Social Security is taxable, not a single dollar. If you're married filing jointly and your combined income is below $32,000, same thing. 0 tax on Social Security. So what does this mean for you? If you are living primarily on Social Security, and millions of seniors are, you may have been filing taxes and paying money you never actually owed. What should you do right now? Pull out your last tax return. Look at your combined income number. If you are close to or below those thresholds, talk to a tax professional immediately. You may be entitled to a refund. That's tax number 1. Let's move to number 2. Tax 2. Property. Tax exemption. Tax number 2. Property tax. This one. This one right here is the one that frustrates me the most, because almost every state in America offers a property tax exemption for seniors. Almost every single one. And yet, the majority of seniors who qualify are not claiming it. Why? Because you have to apply for it. It doesn't happen automatically. The county is not going to call you and say, hey, you turned 65 last month. Here's your exemption. They are waiting for you to come to them. So how does it work? Most states offer what's called a homestead exemption for seniors. Once you reach a certain age, usually 65, and your income falls below a certain threshold, you can apply to have a portion of your home's assessed value exempted from property taxes. In some states, this saves seniors $500 a year. In states like Texas and Florida, it can save you $1,000, $2,000, sometimes more. Some states, like Texas, even have a property tax freeze for seniors. Once you turn 65, your school district property taxes are frozen at that level forever. Even if your home value goes up, your taxes stay the same. What you need to do right now: Step 1, go to your county assessor's website. Search for Senior Homestead Exemption or Senior Property Tax Exemption. Step 2, check the age and income requirements for your specific state. Step 3, download the application and submit it. In most counties, this can be done online. This is free money. Every year you don't apply is a year you're leaving that money on the table. That's tax number 2. Number 3 is coming up, and this is the one that surprises people the most. Tax 3, retirement. Account withdrawals. Tax number 3, taxes on retirement account withdrawals. Now I know what some of you are thinking. I thought I had to pay taxes on my 401k or IRA withdrawals. That's just the rule. And for most people, yes. But here's what the financial industry doesn't advertise. If you have a Roth IRA and you meet the requirements, your withdrawals are completely tax-free, not reduced, not partially exempt, 100% tax-free. Here are the 2 requirements. Number 1, your Roth IRA must be at least 5 years old. Number 2, you must be at least 59 and a half years old. That's it. Meet those 2 conditions, and every dollar you pull out of that Roth IRA is yours. The IRS gets nothing. Now, what if you have a traditional 401k or IRA? Here's the strategy. It's called a Roth conversion. You move money from your traditional account into a Roth account. Yes, you pay taxes on the amount you convert, but once it's in the Roth, it grows tax-free and comes out tax-free. The best time to do this conversion? In years when your income is low. Many seniors have low income years in early retirement, before Social Security kicks in fully, before required minimum distributions start. Those low income years are a golden window for Roth conversions. Talk to a financial advisor about whether this strategy makes sense for your specific situation. That's tax number 3. 2 more to go. Tax 4, medical expense deductions. Tax number 4, medical expenses. Seniors spend more on healthcare than any other age group. That's just a fact. And the IRS actually gives you a significant deduction for those expenses. But most seniors are not taking it. Here's the rule. If your total medical expenses exceed 7.5% of your adjusted gross income, you can deduct every dollar above that threshold. And what counts as a medical expense? More than you think. Doctor visits, hospital bills, prescription medications, health insurance premiums, including Medicare Part B and Part D premiums, dental work, vision care, hearing aids, even transportation to and from medical appointments. For a senior with significant medical costs, this deduction can be worth thousands of dollars. Here's what you need to do. Start keeping every single medical receipt, every bill, every premium statement. Put them in a folder, physical or digital, and give them to your tax preparer at the end of the year. Most seniors throw these away without realizing they could be reducing their tax bill significantly. That's tax number 4. One more, and this one is specifically for seniors who are still working. Tax 5. Earned income and standard deduction. Tax number 5. The enhanced standard deduction for seniors. This one is simple, and it applies to almost every single person watching this video. When you turn 65, the IRS gives you a higher standard deduction than everyone else, automatically. In 2026, here are the numbers. Single filer under 65. Standard deduction is $14,600. Single filer 65 or older. Standard deduction is $16,550. That's $1,950 extra, just for being 65. Married filing jointly, both spouses 65 or older, you get an additional $3,100 on top of the regular standard deduction. Now here's where seniors make a mistake. They let someone file their taxes without telling them they're 65 or older. Or they file themselves and forget to check the box that says, I am 65 or older. That one checkbox, that one box that takes 1 second to check, is worth almost $2,000 in deductions. Check the box every single year. Make sure your tax preparer knows your age. That's tax number 5. Summary plus CTA. All right, let's do a quick recap of the 5 taxes you may be legally exempt from paying. Number 1, Social Security benefits tax. If your combined income is below the threshold, you owe nothing. Number 2, property tax. Apply for your senior homestead exemption today. Your county is waiting. Number 3, retirement account withdrawals. Roth IRA withdrawals are tax-free if you meet the 2 requirements. Number 4, medical expenses. Deduct everything above 7.5% of your income. Keep every receipt. Number 5, enhanced standard deduction. Check that box every year, worth almost $2,000. If this video helped you, please hit the like button. It helps more seniors find this information. Subscribe and turn on notifications, because every single week we are releasing information just like this. Benefits, exemptions, and secrets that the system hopes you never find out about. The next video you should watch is right here on your screen. It covers 7 government checks that seniors can claim, but almost nobody applies for. I'll see you in that.